Good morning, everybody, and happy Monday. It's going to be, I think, a very busy week, or a very important week, I should say, with CPI on Thursday. We'll touch on that here shortly. Just grab one more thing. We're just a few minutes behind schedule, but not bad. And there we go. Cool. Okay, let's get started. Again, good morning, everyone, and happy Monday. Serge Berger here from thesteadytrader.com. This is our morning call, and what we're going to do here is we're going to spend the next 10 minutes or so going through some of our top things on the notepad. It is a Monday morning, so I want to welcome anyone that's new here this morning. Please make sure that you give us a thumbs up like on all the videos you watch, interact with us, and of course subscribe to the channel. It's completely free, but you'll be updated in real time then when we go live, when we have analysis, when we have podcasts, charts, and all sorts of stuff and ideas for you as well. So that would be awesome. Let's get started at number one here with a big picture view. For all you guys that are joining us in Trade-a-thon, today is the first full week that starts at 9:45 Eastern, so in about 35 minutes from now. We're going to spend the entire month of September, Monday through Thursday, with you guys at 9:45 Eastern for about 20-30 minutes each morning, taking you through our repeatable process of how to find trades, how to find investments, because I think a lot of people have a lot of tools, but no actual process. And that's really what holds them back to their full potential. So we'll look at the broad market here first. I want to touch on JP Morgan. I want to touch on Avago, which is Broadcom. I want to touch on the bond market and, of course, the dollar as well. So, and then we'll, of course, start with the equity market as we usually do. Just again, a quick reminder, and I keep reiterating that this is what I'm going to do, and I am doing it. It's just reiterating to people that your Mag 7 stocks are not winning this year. They're good, they're up, they're doing well, but they're being beaten, like a rented mule from by a lot of other stuff. And that's really, I think, one of those things that a lot of people are just, blissfully and willingly ignoring. But we view just the beginning of a much longer trend where we're not bearish or short Mag 7 stocks. That's not the point. But we just try to reiterate to people that we're moving into a different regime, a hard asset regime, where the Mag 7 trade and thus the S&P 500 is going to not even close to going to do as well as it has for the past 10 to 15 years, and that's going to blow up a lot of people's accounts, and that's what we're trying to help you not to do. So that's the big picture view. Now, I want to do two charts here. First of all, we'll start with the equity market, just the S&P 500 quickly. So just so we go through that, because I know people like us to go through that, and of course I get why. It's an important index. The S&P, as far as we're concerned, remains in a bullish momentum. So we have not had any momentum change. If we use our trender indicator, which dictates momentum, which I should probably show you rather than just talk about it. So let me quickly bring that up over here in just a second. You will see here that the S&P 500 remains in bullish momentum. So this is our momentum tool here. You can see bullish momentum started back on the 29th of April, and it remains intact. We do not have a sell signal in momentum in the indices. Where we do have a momentum change is in stocks like NVIDIA and a bunch of others that I'll mention at least one more. But you can see that NVIDIA has a change in momentum. And it's going to be very difficult, certainly for the NASDAQ, but even for the regular market cap weighted S&P, to continue to go higher, period, unless we have help on the part of NVIDIA, just because the mathematics work that way. So this is just an FYI. If you are a user of the trender, you know where the profit targets are for us. But I want to point out here that this is a change in character from a momentum perspective, not a long-term trend. The long-term trend remains bullish, but a momentum. That's multi-week, maybe multi-month. So multi-day to at most multi-month kind of trends. Not trends, momentum that is certainly changing. So that's one thing I wanted to point out here as far as momentum is concerned. I'll give you one more, just why not? Another stock that I think a lot of people are quite frankly rightfully watching. It's an important stock, and the ticker symbol is PLTR. And here too, you will notice if you look at this that we have bearish momentum, right? So we had bullish momentum starting on the 14th of April. Now we have bearish momentum. We have a profit target there as well that our clients and the trade op members know about. But again, that is a change in momentum, not a change in trend, but a change in momentum. And that a change in momentum can lead to a change of trend. We're not there yet. We're probably not even close to it. But that's one thing I want to show you. Now that we've gone through a couple of stocks that people probably like to watch, let's talk about one that they're probably not watching, but that's probably actually a better tell of sort of the broader stock market's direction, and that's JP Morgan. I've talked about JP Morgan. It's an incredibly important stock to watch, and we've shown this chart now several times over the past number of weeks, and I'd like to just show it to you once again here this morning because we have a couple of more developments taking place here. So this is JP Morgan, and the reason why you would care about JP Morgan is because if you think about it, what that company does, it's got a really, really good look at not only the US economy, but also global economy, and the stock is once again at the very upper end of its trading range that this basically has been in for, or has been developing for 12 plus years right now. Now you might yourself, Serge, why do I give a shit about JP Morgan? I only trade the S&P 500. Well, I've got news for you, Fred, and that's this, right? It is the same chart. So if you look at the S&P 500 and you look at shares of JP Morgan, you will see that they track each other very, very closely. So that's important. Now, more near term, the problem with JP Morgan, or not I don't even know what to call it a problem, it's just factually, is on Friday, we had a bit of a reversal day. And this is broadly in financials, but JP Morgan had it too. Now, it doesn't mean it's the end of the day. It's got a book ratio of about, price to book ratio of about 2.5, 2.4 right now, which is quite lofty. Jamie Dimon is selling stock. He's saying they're not, he doesn't like the stock at these levels. Not necessarily in those words, but close enough. And so, that gives me a bit of a cause for a pause when I hear that kind of stuff. So that's JP Morgan. Again, been pointing out for a few weeks. I thought I would share it again here as well. Then, of course, we have the bond market, which I know, again, people just don't really care about, but I'm telling you, one of my more profitable trades last week, in fact, my most profitable trade next to silver last week, was just being long the 2-year yield, the two-year future contract. I remain so. I haven't changed that. That's basically a bet on yields going down. I highlighted it here in real time last week. Maybe some of you took notice. We've been, I think, very clear about that over the past number of weeks. We said that if we break below 3.65 and then 3.6, then we'd be heading towards 3.5% yield. We are now at 3.5% yield. And I am quite frankly thinking that maybe I should close this position before we get to Thursday's consumer price index, because that's kind of a binary event. It's been very profitable, and from here, whether we go towards 3% or not, it remains to be seen. But I think for me personally, taking some profits here is probably not a bad idea on that trade. So essentially, if you don't do futures, then one way of having done this trade would be just being, for example, long the SHY ETF or some sort of option structure thereof. So that's the same way, the same idea directionally as that's concerned. The dollar index, of course, you can see continues to weaken once again this morning. The reason it's weakening is because again, the economic data, of course, on Friday, the jobs report, the bond yields are continuing to go lower, so the dollar is going lower as well. So that's what's taking place there. And then two individual stocks. Actually, I'll give you one, AVGO. This is Broadcom. This is a chart that I shared with our clients on Friday while I was on a longer flight. And if you look at Broadcom, we actually have an extreme overbought signal using our Vertical X Pro as well, FYI. But what I'd like to share with you here is Broadcom's trend, and you can see that the stock, even though we can draw the lines in a whole bunch of different ways, I think the most pertinent sort of line right now to draw is probably this one here. So this is a trend that goes back to 2022, and we reached the upper end of that range on Friday on the back of AVGO having a nice rally because of, apparently they landed the OpenAI or something as a client. That's also why you're starting to see pressure on NVIDIA a bit more. But to me, this is probably a better opportunity to take profits in the stock. Maybe going outright short is it maybe a bit aggressive at this point, but doing something that would more closely resemble being neutral as opposed to utterly bullish up here in something like AVGO seems an appropriate thing to do. I will point out that using our Vertical X Pro indicator, which measures extreme short-term overbought and oversold stocks, AVGO actually does not yet have that signal, but that could be days away if we have another move higher in AVGO. So that's a bit of a very short-term timing tool. So hopefully this is helpful, folks. We're just getting started with this week. Keep in mind that we've got trade-a-thon starting in about 15 plus 10 in about 25 minutes. And I look forward to seeing you guys over there. John has an iron condor on AVGO. Yeah, that seems like a reasonable thing to do. Iron condors, for those people that do those kind of things, basically what an iron condor is, I can quickly end on this, it allows us to capture, in my view, in one of the best ways possible, sort of a bit of a range. We typically tend to leg into iron condors. So instead of putting on an iron condor here, what we would first start off with, for example, would be to sell a bear call spread above the market, and then if the stock were to go down, maybe at some point sell a bull put spread. So that's typically what we like to do, but we can talk about that more in member sessions or another session there. But yes, please give us a thumbs up, like. It'd be very important for us to be able to continue to do this morning call. Hopefully you're valuing it. If not, please let us know what we can do better. And again, everyone that's in Trade-a-thon, we're going to go over there and start off the week in about, like I said, 25 minutes. We'll also be in trade ops, of course, throughout the day. But the Trade-a-thon is what it is we're spending Monday through Thursday every single week here in September, a 20, 25, 30 minutes going through our morning routine. How do we start the day? How do we look for trades? What's the process? That very repeatable process that most people just don't have. Most people have a lot of tools, a lot of indicators. We see what people have, but there's really no process that people actually know how to use because there's too much news, there's too much confusion, and I get it, right? So that's how we're doing that. And all of you guys that are Trade-a-thon members, we'll see you over there in about, 25 minutes or so. Have a great start to the day, and we'll also be back here tomorrow morning, of course, at 9 o'clock Eastern. Please give it a thumbs up, like, subscribe, and we'll see you soon.